Hello and welcome to this episode of the Digital Disruption podcast. On today's episode, I'm joined by Ollie Cook. Ollie is the co-founder and CEO of Echo, an award-winning fintech that empowers businesses, consumers from around the world to take on climate change. Ollie, welcome to the podcast.
Thanks for having me. Great to be here.
Ollie, tell us about Echo. What is it?
So Echo, like I said, we're a fintech platform that empowers consumers and businesses around the world to measure their climate impact, then reduce their climate impact using smart tools like behavioral economics and tangible nudges, and then offset the remainder. We believe that everyone becoming 10, 20, 30% better on their carbon footprint over the next kind of 10, 15 years will have a seismic impact. And that's what we go for. So we want to empower millions of people, doesn't matter where you are around the world, what you're doing, to at least start your journey to your sustainable life of the future. And Echo is a tool to do that. We have a few ways of doing that. One is we have our own Neo banking app available in the UK, so you can download your Echo app. And as you tap your Echo Good Vibes card, we can tell you your carbon footprint in real time. We then help you reduce it through nudges. And then as you tap your card, you're planting trees, you're saving plastic bottles, so you're having a positive impact on the world, and then offsetting the remainder. So you're always going to have a carbon footprint as long as you live your life and you travel. To offset the remainder. Then the other half of our business, actually, we use all that technology and serve that up to brands, more recently football clubs, banks around the world, saying you've got millions of customers, why don't you empower them to at least learn about their carbon impact and help reduce it? And that's Echo. We kind of have our both consumer arm, but also offering it up to other businesses around the world.
Brilliant. And let's just dig a little bit more into the journey behind Echo and what's got you to where you are today. Do you want to start by telling us what inspired this journey and go from there?
Where it came from? Yes, there are four founders, and we're all sitting around just talking, just generally actually, in a pub, as all good ideas are. And we're talking about climate change. And this is both as an individual, but also we're all in different businesses as business leaders in what we were doing. And actually, as a person, I care a lot about climate change, but I was really struggling to make an impact. I find it very hard to know what I was supposed to be doing or whether what I was doing was making an impact or not, and therefore motivation becomes very challenging. And actually, we all felt the same thing. So I really, really care about it. We all did. We all have kids, we all have families, etc. And we want our future generations to, have a world like one we're living in, not torn apart through climate change. But we're all struggling to do something about it. And then we kind of crossed over to as business leaders. Well, what am I doing in my business to help me live more sustainably? Now the business be more sustainable. And actually, okay, we were in lots of service-led businesses, so we did green energy and reducing paper, etc. But it felt a bit not deep enough for what I want to be doing. So actually, how can we then help businesses on their own journey and actually help their staff or help them empower their businesses, their customers, etc. And you realise that's the same kind of problem, just applied in different ways, and that people care, they really want to do more. That's not really the problem. The problem is how are you motivating me? How are you educating me to make the impact every day of my life? That's the problem. That applies to both consumers and businesses. And then from there, we started building out Echo over about 2 or 3 years from now. Started originally be called We, which is a terrible name, but we're outside WeWork and a few beers in, so that's probably why. But then it kind of evolved to Echo, and the theory behind Echo is that it's like the butterfly effect. You make a change, and over time it kind of grows and develops around the world. And actually, that echo effect of what you can do and telling other people about your impact is massive. And that's why kind of we've grown our business. So started in a pub, all built on the same problem, but actually it's both consumers, businesses. We all feel the same issue.
Yeah, brilliant. And let's dig a little bit deeper into actually how you go about starting a fintech like this. What were the things that you and the team looked at? How did you go about going from that initial concept over those few beers to actually saying, here's the steps, here's the things that we need to do to actually get this thing to market and get going?
Yeah, it's often I think it looks harder than it is. It probably comes across wrong, but when you think about so we started with launching our own bank. And it's very hard to launch a bank because you need to build banking software, you need to do FCA licensing, etc. But in reality, there's a lot of partners along the way who can help you do that. So we use a partner who helps us with our banking services. We use a technology provider who helps us build our technology. And actually, you can create a neobank using strategic partnerships with people who are like-minded, who are trying to do the right thing, and you get there much faster at a much lower cost. And when we started Echo, we're all from financial services background and fintech background, so we kind of knew that. And it was more a case of, let's just hone the proposition, let's make sure it works, let's test with customers, let's test with businesses, and then let's create a partnership network which will allow us to grow at scale. And then, when you're big enough, when you pick out the right moments, I will get rid of that partner and I'll build it myself, and I will get rid of that and I'll build it myself. But don't start from doing that. Let's start from creating a partnership that allows us to test the products with real life customers, real life businesses, and then you go from there. So it very much started with let's build a proposition, let's focus on that. Let's make sure the commercials work. You look at fintech space, it's very hard to make money in this space. Actually, our fundamental principle is, if you ever want to be environmentally sustainable, you kind of need to be financially sustainable, because otherwise you're a capital sink, and that doesn't really wash for me. So actually, let's make the commercials work, the proposition works, and then let's build these partnerships together to help us grow the business. And that's been, so far, extremely beneficial for us, because partnerships also help you grow your business in different ways. That it's not just me and my thoughts. There's a group of us around Echo helping us grow the business.
So it's been very much a modular approach, or a modular strategy. Let's find the right partners, coupled with the strategic approach of, well, let's buy rather than build, but medium to long term, what we feel we might need to potentially build internally, we will do. That's effectively been the approach you've taken.
Yeah, it's picking the bits that are USP are ours and are completely Echo built. So our platforms, not software, are ours. But bits where you're not going to win, cost a lot of money, such as a banking payment platform. It's nuts to build that yourself. I'll go and find someone else who can help me do that in a really lean, fast, efficient way, and with a lot of reliability and stability. But where we saw the USP going, this is what we're about as a business, we'll do that ourselves. And we'll own our own platform. But it's picking the other parts of the ecosystem that we need that says, I'm not going to win by doing this. Perfect example is KYC. So once you open an account, you need to kind of check that this is the person who they say they are, do all the ID checks, all the data checks, face recognition, etc. Why would we build that ourselves? We're not going to win. We'll go and partner with the world's best and plug that in, and that takes us a week, and we've already got the best products in the world for that. So let's do that, because we're not going to win there. But bits like how we use our behavioral nudges to help you reduce your impact, how through our single APIs we allow you to measure, offset, all these kind of great things, we should own that, because that's our space. That's what we're going to win at and what we're going to be the best at.
Yeah, I think there's a lot of power and value in what you've just described there for people listening and watching this, and that is to identify, and it's a really interesting turn of phrase you used, where we're going to win. I mean, strategy to me has always been defined as where you play and how you win. And what you've just described there is well, the question almost is, well, where will we win? We're not going to win at KYC. This stuff's already been built. There's already somebody that's leading this in the market. We just need that. However, the thing that we really need to be good at, the bit that's really important to us and to our customers, and ultimately your purpose and your sort of principles and the whole value behind Echo, that's the bit that you're focused on. And I think for anybody listening or watching this, if you're on that transformation journey, if you're an incumbent existing organization, or if you're thinking about disrupting a particular sector or going out and making a change, that's a really important point that you've just made, that many actually don't get right because they focus too much time in those areas.
Yeah. And when you're lean, I had a brilliant, I was working with a brilliant CTO at an insurtech who kind of lived by this principle. And it's so refreshing when you realize you speak to someone and they're like, right, is this help the narrative of what we are, our USP, yes or no? And then it's that clear. If it's yes, I'm going to do it myself. And it's going to be the best, and it's going to be best in the market. But if not, you know what? We'll go and buy it and we'll go and integrate it. That's fine. Yeah. And that kind of, it taught me the journey of, actually, this is how a really successful insurtech business does it. We should adopt that. And yeah, it's worked for Echo so far.
Excellent. Let's just talk about lean and agile for a little bit, because these are principles that are widely adopted now inside organizations. The phrase agile sort of 10 years ago was really only being bandied around inside IT departments, whereas now, organizations, the way that they're organized, the way in which they work, should be to adopt lean and agile principles in terms of how they work, build quickly, incrementally, get things out to market, and iterate from there on. How important has that approach been in the development of Echo, going back those few years to where you are now?
Yeah, really important. And I think one of the big reasons for it is, like I said, you build, you ship, you learn, you develop. You don't wait till it's done, go live. Actually, when we found when building a startup, costs are a big part of it. Obviously, do you have enough money? Do you have to grow? You have to very sensibly spend. Being able to launch something and then iterate it, launch something, iterate it, launch something, iterate it. Actually, we were dropping new features every 48 hours in some cases. Because like, let's get it in, let's test it, let's get it in, let's test it, let's get it in, test it. And that allowed us not only to build things that we knew worked and get feedback from customers and actually see the data that says this works, this doesn't work, but also allows us to be very cost conscious we'll only do the things that work and we'll stop investing in these 10 features, only 3 of them people actually want. We don't have to do that. We just do it and we drop it and we do it and we drop it. So it worked on a development perspective. It worked on a speed to market, but it really worked on a cost basis as well. So it's fundamental to us. I don't think we'd ever talk about it a different way. But interestingly, I find with Agile, it does come with challenges. So you get to I want this and how much does it cost? What's the time? When's it all going to be done? And the answer is invariably doesn't work that way. Doesn't work that way.
Yeah.
And it's not just as a business, it's investors who want it or business partners who want it, who aren't necessarily used to the Agile way of working.
Yeah.
That kind of, yes, we can do our own thing, but equally we've got partners who expect certain things and trying to say, no, this is the way it works. It's a bit different, but that's okay.
Yeah. I think there's probably a lot of change and transformation managers and executives and leaders that are probably watching and listening to this sort of saying, yeah, I feel that, because ultimately they're having to go back to stakeholders and have similar conversations. Excuse me. How do you manage that in terms of going back to, say, investors or stakeholders who, invariably want to know time, cost, when? How do you deal with that when actually working in an environment and building something so innovative and new, where actually it's quite difficult to estimate that and be exact?
I think so I've had that experience at big businesses. So I've been ex-big bank, I said insurance business, etc. And trying to do that internal conversation is really, really tough. I think I was educated along the way. So when I started my career, Agile wasn't really a thing. Now it is. Doing it at Echo is easier in a way because we are masters of our own destiny. So it is a bit better. I tend to go big picture. So I focus less when I'm updating people on this is where we are, this is the drop, as and when it's going to happen. More in this is where we're going to be in 6 months, 9 months, 12 months.
Outcome.
And these are the key KPIs. And actually, don't worry about the rest. That's what we do. That's my job. That's what our team do. We're good at it.
Yeah.
Just focus on this big number here that we're going to get to and watch us get there, and let's track to that. And actually, don't worry about this stuff.
So I guess it's focusing on outcomes, isn't it? That's all about outcome-based delivery rather than, you use the phrase KPI, which is obviously important. But again, I think it's quite important for people to recognise that actually if you focus on outcomes, that's a much better way to get out and measure things. But it also provides a level of information and focus and attention to stakeholders. Well, look, keep your eyes on this bit. We're incrementally getting there, and here's how we're doing that.
And it's empowering as well to the teams and the dev teams to go, you know what, you're able to go and do that. You're allowed to go and do what you're good at, because they're way better than I would be doing stuff. Well, here's the goal.
Yeah.
Crack on.
Yeah. And what sort of challenges have you faced on this journey? Because you're 3 years in now since the initial sort of concept, you're live, you launched, what's happened in that time that's been quite a challenge, and is the first question. And leading from that, what sort of pivots have you had to make?
Challenges, I think we've had lots, as all startups do, and you kind of overcome them quite quickly. But I think with our ecosystem and picking some partners where we're not going to win, over the years we've picked the wrong partners a couple of times, and they weren't able to deliver what we wanted at the speed we wanted, or weren't able to deliver some of the technology that we needed.
Was that like technology development partners? Was it doing that?
Some technology development partners, some more strategic partners in our core functionality, and that's okay, right? So what we've learned over the period is we are going to make the wrong decision now and again.
Yeah,
that's okay. We accept it. The key thing is picking it, understanding it quickly, and changing it very, very quickly. So we had a wrong technology partner. We offboarded them very quickly. We found a fantastic one. And, we are much better for having gone through that experience. And there are other examples of that. So we found the challenges, when you spot them, the key thing we found is you've got to spot them and be critical. And was it the right decision? Was it the wrong decision? Is this the right partner anymore? And if not, quick with an action of we're going to change it. We're going to change it. Here we go. We found a new partner. Let's move on. Let's get going. Learn from it, but equally you need to move fast. What I found, you can't have, this isn't great, we're going to sit on it for 6 months. Nope. You've got to find it's not right and get it fixed straight away.
Yeah.
But accept that those are going to happen. I'm sure we haven't got it right, where we are now. In our future, we'll have some bad partners or make bad decisions, but that's okay. It's about finding them and picking them and fixing them when you see them.
Dealing with it quickly. Just on the technology bit then, I know there's many people out there that are going through that journey of needing partners, because at the end of the day, you can't do it all on your own. You've got to have partners, especially delivery partners at times. The learning that you had from that experience, what would you do differently, perhaps in those early phases of choosing or selecting a partner to work with? What would you do differently?
I think, and this is probably very specific to us where we were as a business when we're building. We started with here's exactly what we want. Here's our requirements. You tell me the cost. You tell me the timeline. It's a contract. Let's just do it.
Yeah.
And that didn't really work. So we're trying to force hands to say, give us the number and the time. Because it's back to the Agile thing, I've got a runway. I've got these targets I need to hit for our investors, etc. And actually to grow the business.
Traditional way of doing things, isn't it? That's traditionally how you procure services.
Yeah, I need it on this date. I need all these things, and I need it within this cost. Can you? Yes or no? And we changed it now to a provider who have some equity in the business. They've invested a lot, actually quite a lot, in us, and do it more on here's our strategic end goals and the cost of the cost, but the delivery will be at the top end of what we want, and the quality will be much better. And actually, because they are invested in us, they understand the mission and vision, and we all have the same outcome. Which helped a big amount for us, because you're realizing that I'm not speaking to a contracted partner. I'm speaking to an integral part of our business who get the end goal and are willing to do their thinking and their awareness of this is what we need to do to get this business operating, get us growing, and what we can do for our customers, our businesses. So that flip for me is a big thing, is finding partners who have a skin in the game like you have. And therefore your goals are all aligned, versus a contractual delivery where I found that you're not quite aligned on what you want out of this conversation. And actually we find out with all our partners now, we're all got the same goal here, and therefore things are much, much easier to get done.
I think for a lot of people that are looking at, this is more for sort of entrepreneurial tech founders who are going in to start something, this sort of next bit. But I think for a lot of those people that are going into something like this, that there's almost a keen focus to build everything all at once and get it out there and get it done, rather than actually realize and consider that this is going to be a long-term part. You don't just build a mobile app, for example, and that's it, it's launched, and just focus on marketing. This thing has to continuously improve and continuously evolve. And I think some of the things that you've said there are really important for people listening and watching to sort of take on board. If you're kind of starting out on a journey like this, be very mindful that, you've got to have funding to develop this thing, whatever it is that you're going to be building or take to market. It's got to evolve over time. You've got to invest in it, which is a really important point, I think. And I see many young startups that kind of get this wrong. And they waste so much money kind of almost perfecting the vision of the idea before the launch, and that's something I think that people get wrong a lot, and I see it a lot.
I think it's really hard as well. It's very hard when you've got, when you are let's say a pre-seed company, you've got your idea, you have limited funds, you kind of focus on the end goal, get the product live. It's very hard to remember that there's a business post that moment, and you don't just walk into a fundraise. It takes time to do that bit as well. And actually the awareness that does take time. You do need money, you do need to develop it. It's about long-term business here. I hope people are building long-term business.
Yeah. Yeah.
I think it's tough. I think it's really tough for the founder to do that, because equally you've got to, I need to get this thing gone and out the door so I can start growing and start going from there.
Yeah. Interestingly as well, those same challenges exist in corporate organizations, especially, I mean, businesses that I work with and have worked with over the years on their sort of transformation journey. One of the challenges has been that the behavior internally has been very much focused on not kind of getting things out quickly. You talked earlier about releasing features every 48 hours. I mean, this is unheard of in sort of much more traditional businesses that have been around a long time. It's a big behavioral shift to get to that point. But to understand that, look, we're going to build this technology, it's something that's got to live and last forever. That's quite hard in those large environments, no doubt, as you found in your own career. But it's a switch. It's a different way of working. It's a mindset shift. But unless you're prepared to make that shift, life is going to be very complicated and hard. And ultimately, I think for more incumbent organizations, especially in the financial services space, and I think this is what many of them have faced now, is that they're not going to remain competitive because of that, because there's other businesses that can come along, such as yourselves, and kind of really target things and get stuff out quicker.
Yeah, I think you're right. I think also, so putting my big bank hat back on, I think there's a lot of risk in these businesses, which is kind of, people forget the whole, big banks have 10 million, 20 million customers sitting there. You've got to build your technology in a way that says I can drop and feed into 100, 200 customers. Therefore, my flows are okay. Because otherwise, you're making a change to 10 million customers. You get it wrong, you're in real trouble, right? You're on Sky News the next morning. You've just developed something slightly wrong. Where maybe we as a startup can get away with it a bit more. People are more willing to accept a little fault, a bug that lasts, a few hours. That's okay. You're not willing to accept it as a big bank. So it's that evolution, right? They've got a real big challenge here. I've now got to evolve my business that allows me to do this in an agile way, but equally recognizes I have this big corporate behind me. That needs to be stable, because banks are built on stability.
Yeah, sure. You mentioned investors before, pre-seed, and then obviously going through the sort of funding journey to sort of the entrepreneurial startups out there. What's your advice to them about that, and that people who've never been through this journey before, from sort of concept to raising cash to build and then launch? What would be the things that you would be telling them to look out for, how to position themselves?
Good question. No, I'm not perfect at it. I'm learning as well as we go. Firstly, I guess just the basics. Make sure you've got your SEIS and EIS things done. That is a brilliant, brilliant scheme for any startup business. Get that done and sorted early doors, and make sure you're applicable for it. It's not what businesses are.
And just for people watching and listening to this, these are tax efficient ways for investors. So the SEIS and EIS schemes are quite important.
They're really important. They help you. They give security to the investor. They give tax breaks, etc. It is. It's a big thing, and if you don't have it, actually, it becomes much harder. So I guess that's the first one to get sorted. The other one is realizing that it's a journey, it's a process, and we found angel investors who understand that the thing that you're buying into now is not necessarily the thing that it's going to be in a year or 2 years, but you've got the team behind you who will figure this out and will pivot a lot, and will move around and will make it work. But the mission, the goal is still the same. The business will pivot. And we found angel investors who get that and understand that have been really helpful and actually offer huge advice. I speak to some of our angel investors relatively regularly, and they give me tips, advice, what we should be doing, what we should be thinking about, and are partners of our business and get the mission and where we're going. But I think they're quite hard to find. As the other reality, I think they're really hard to find. Actually, we've found it through our networks that we know, or we went through Seeders, did some crowdfunding for a bit, and found some brilliant investors through that as well. But it's really tough, I think, finding angel rounds early on. Post that, it really is how do we get to revenue? And the market right now is you need revenue to be able to raise real money.
Yeah.
And when you're on that revenue, just how are we going to scale this thing up to a really scalable technology business? This is how we're going to do it. And then things become easier once you start showing numbers. As long as they're good, things are easier.
Yeah, very much so. And talking about numbers, post the launch of a product, it's all about marketing, sales, getting customers. Tell us a little bit more about your experience with that as an early sort of stage startup, from going into the launch and then actually starting to generate revenue.
So we started our launch, or the brand launch, with a waitlist. And that was twofold. One, we wanted a waitlist because firstly, it gives you the customers to speak to and get feedback from, either pre-launch when you're testing or post-launch when you're trying to get people on board and try and be advocates of your business. So we had it for that reason. And it required marketing and investment to build a brand and then create a waitlist. That shouldn't be underestimated, the amount of effort it goes to get them that thing there. But also, we use that waitlist to help us raise money. So there's that kind of combination of if you're going for a pre-Ray, we were a consumer, that was our only thing we talked about, was our consumer product, and we were pre-product. So actually, you need some kind of, I've got these thousands of customers waiting for us here, and I've got a good CPA that proves this is a product people want. So we can use it both for a product, but equally for an investment perspective. But I think people sometimes get carried away with the waitlist model and going, I've got 100,000 people on my waitlist. Isn't that amazing? Well, have you really thought through your conversion and whether they are the profitable customers that you need in the future? And are they the right people? And is that just a waste of money thrown up front to go and get a waitlist to prove your point? Trying to manage that to say, I've got a really good CPA, I've proven product market fit, I've got exactly what I need. That's okay, rather than burning another 20, 30 grand of marketing spend to get a big number up because it looks good. And they kind of, the self recognition, I don't know, there's a word for it, like the self-importance of, I've got 100,000 people on my waitlist, aren't I amazing? Not if someone else has 5,000 and they've got 50 grand in the bank more than you. No, that's probably the right answer.
Yeah.
That takes time to kind of understand that. And then when you go live, it's a lot of testing, learning what works, what doesn't work, how you're going to get cost efficiency, how do you get your user base for a consumer app, how do you get your user base to promote you and activate you, because that's worth way more than any marketing I see on Instagram or whatever that might be.
Sure. And what's been your strategy and approach to acquiring users onto the application for your consumer business?
So we do quite a bit of social media marketing, basic, pay-per-click type stuff. And then we added some influencer work as well, which was brilliant for brand association. Picking your influencers is hard. Influencers in financial services is also quite tough.
Yeah.
And then we're now pushing a lot more on the referral. So our existing customers who love us refer us.
Yeah.
And that's sort of seamless functionality in the app that allows you to kind of grow with your CPA just drops week on week on week because we're growing without cost. And it's fantastic. And actually, because a big part of our brand is actually positive reinforcement on climate change. Doing good, feel good about doing good allows you to do more good things. That's why our card has good vibes written on it and is bright. And I get stopped 3 or 4 times a week. That's not a joke, about my card. And people going, what's that? How does it work? And that's a big part of us in terms of our referral mechanism, but equally helping people say, well, I feel good about doing good. You should feel good about doing good. Because if we all feel good about it, we'll all do more of it. And that's good. That's a big fundamental part of our marketing approaches throughout the whole brand is positive reinforcement on doing good. It's key to us.
And now that that sort of side of its launch, you mentioned in your introduction about Echo, there's obviously kind of 2 sides to this really, and the business as it's evolved is now I think referred to as more taking more an API approach and connecting. Do you want to tell us a little bit more about that and how that's come about?
Yes, so obviously we want to empower millions of people around the world, millions of consumers and businesses. You can do that on your own brand. That's fine. That's good, and we will be doing that. But equally, we can, again, partner with other people who already have millions of customers and are trying to find a way to help them live more sustainably. So all of our technology that we use on our app is served up to brands around the world, help them empower their fans so we can get all their customers to allow them to empower them. But equally for us, we get to see that impact of millions of people around the world much faster than we ever thought was possible. One of the early relationships we've signed is with football clubs, like Champions League football clubs. So we've done a relationship with Real Madrid, Glasgow Rangers, etc., who are trying to tackle climate change with their fan base, which is a really interesting proposition. I've got loads of fans who love football, love the club, adore it, and now trying to help them live more sustainably. Could be really quite powerful because if I'm so emotionally tied into my football club, imagine if we could use that emotion when it comes to climate change. That's amazing. So actually, people like that are using our technology. And then we're also rolling out to other banks and solution providers around the world to do it to their fans and their customers and their businesses. And that's a big part of our evolution. It was always the plan. We probably just got there 2 or 3 years faster. And the reason we got there 2 or 3 years faster is we found someone who loved what we're doing, had the Echo app and said, I want this for my football club. And then off we go.
So it was always part of the journey then. It was on the roadmap to do. It's just happened sooner than done.
It was always the plan. It just is probably 2 years faster than we thought it would be.
Yeah, brilliant. There's something in there that I think is important as well, and that is the importance of how things can evolve. And if you're configured or structured in such a way where you can't make these pivots and twists and turns because that's business, that's life, and you restrict that by almost being sort of hyper focused on your roadmap rather than kind of recognizing that it's a living, breathing thing that ebbs and flows and needs to change based on the market. That can really hamper an organization's ability to evolve, grow, and ultimately become profitable.
I totally agree. And what I've found interesting in this space is meeting lots of people and having conversations that not necessarily have any relation to you or you think it's going to go anywhere, but over time you realize, well, we can do this together, or someone who can help. And actually that openness to go and speak to people who want to work in a collaborative manner allows you to find opportunities maybe you haven't thought of before. And that's it, living and breathing, because I had this conversation, this one, now suddenly look where we are. We've got there much faster than we ever thought we would get there. And that's okay. That's a really positive thing, but it's making sure your head's up, I think.
Yeah.
I could be head down, smashing away at my keyboard, trying to email or code or do whatever. But getting your head up and going speaking to a range of people opens your mind to there's much bigger things out there, much faster than I thought was possible on my own. And that's a really positive thing.
Brilliant. Ollie, it's been a pleasure talking to you. Thanks ever so much for taking time out of what is, I know, a very busy and hectic schedule. I'm sure there's much that we've spoken about that people will find interesting and beneficial. Just for the listeners and watchers of this, where can they find out more about Echo and contact you?
Yeah, joinecho.earth is our website, or hit me up on LinkedIn. LinkedIn is my chosen social media platform, and I'm on it all the time. So yeah, just DM me, and I'd love to chat to people who are interested.
Brilliant. Thanks again, Ollie.
Thank you. Cheers.